The views discussed in this conversation are the views of individuals and not of Arrington Capital. This podcast is provided solely for informational purposes and is not financial, legal, tax, or investment advice. The participants of this podcast are not recommending any particular security, protocol, token, financial instrument, or other tradable asset or any investment strategy. It is not offering to sell or soliciting to buy any security or asset.
Hi, everyone. Welcome back to the Pirate Pod from Arrington Capital. This is the first episode where we are actually having two guests here today instead of just one. We're covering a topic that's really important. We had to bring a couple people in to talk about it. We at Arrington Capital have made some investments in the security space over the past year. I'm really excited to have FDR from Drosera. Drosera is building trustless and decentralized infrastructure for detecting exploits and mitigating financial loss across a number of Web3 applications with decentralized incident response, elevating security in the staking space, and they've been killing it on the partnership front. So we'll give an intro to FDR and ask him a little bit about his background in a minute. We also have Andrew from Lockchain. Lockchain recently came out of stealth. Andrew's launched his company that's going to empower institutions to avert catastrophic events, as have happened in the past, before they happen, by monitoring different events. It's easy to understand. Risk notifications are very easy to understand what's happening that might be relevant to your portfolio, including counterparties, making sure that they have your funds where they say they do. It was recently at their launch at NASDAQ, and they've done a great job operating in stealth, and I'm super excited that they are now live and out to the world. So as per the usual with all of our Arrington Capital Pirate Pod podcasts, we like to put a focus on those that are at the forefront of the space in the industry. So Andrew, can you take a minute and give us a little bit about your background, what led you to crypto, and then why Lockchain?
Thanks, Kelly. Happy to be here. I'm a longtime cybersecurity practitioner. So I started at a university in Atlanta, Georgia Tech, working on DoD cybersecurity problems, and really fell in love with the space over about a 15-year career there. And then kind of after that, I was the CEO of a company in Switzerland called Kadelsky Security, doing about $200 million a year of cybersecurity for big banks, the United Nations, and kind of other big enterprises. There, we had a huge team, like 600-700 people, kind of focused on protecting these big enterprises through monitoring and detection and response. And around 2017, 2018, we got a call from a couple of protocols that were going live saying, hey, we're worried about the security of our crypto. And at the time, we had a couple of cryptographers on the team that were world renowned in what they did. Long story short, that spiraled into a huge crypto audit business that really around 2021, 2022 was just off the charts busy, providing services to all the ecosystems and helping these projects secure what they were doing. And, you know, I was running this big enterprise business and thinking to myself, man, is this crypto stuff fun? A, and then B, there really isn't a kind of security company of record out there doing more than services. And so kind of putting two and two together, decided to go form a company. I met a co-founder along the way who was also a CEO, and he had just left his business as he sold it to Barracuda. His business was called Scout Cybersecurity. His name is Aiden Kehoe. And he and I met and said, man, we're trying to do the same thing. Let's join forces. We went and hired some senior folks, struck a partnership with Matt Higgins out of RSE, Shark Tank, and decided to go focus on a company that could peer around corners a little bit. Because as we were forming the company, some bad things happened in the crypto space. I mean, the crypto winter hit, the FTX crash, Circle issues, and kind of what we believe the impetus behind the platform was these events didn't just happen. There were warning signs. We found that traders and hedge funds and asset managers and people trading crypto institutionally needed some help, and there was not a platform or a solution of choice out there to give them information about what's going on, let them peer into the future a little bit, and do the risk management that's normal in this type of space for an institution. So that's why we built Lockchain. We're built on a big AI platform to help us do this without that army of analysts, and we provide information to traders that help them feel safe in their transactions.
Thank you, Andrew. FDR, can you give us a little bit of your background, your journey into crypto, and how you ended up founding Drosera?
Yeah, of course. So I spent about 5 years at U.S. Army Cyber Command alongside the NSA. I was a 17 Charlie cyber operations specialist. I specialized in malware reverse engineering, threat intelligence, and I actually got a bit of my start in crypto and my understanding for the space when I was working on what we call co-coms, working on a cyber protection team, and also looking at things from the intelligence perspective on how APTs and nation states were at the time. We've kind of seen a bit of an evolution since then, but at the time, the thought around how they were using some of these assets to avoid sanctions, to fund terrorism, or just otherwise align themselves against U.S. strategic interests. So after my time at the NSA and Army Cyber, I went to MIT and did a short stint there under a professional course for cybersecurity. And my first real taste of startup world was actually with Franklin Templeton in San Mateo, where they were innovating a lot of Web 2.5 sort of bridging projects, that were based on distributed ledger technology. After that, I began moving into the EVM, Cosmos, and .sama ecosystems, creating sort of internal and proprietary versions of what would eventually become Drosera. And it was there that we started to see a lot of these pain points, security infrastructure becoming a massive spend point, becoming, infrastructure that required extensive sustainment or full-time dev teams to really create and flesh out. And that in and of itself was a bit of a non-starter, especially for smaller projects or projects that aren't as liquid as some of the other protocols that we see in the top 25. So shortly after some of those stints, I did start my own business. I created Groom Lake, which is we bill it as the private military corporation for DeFi. That organization had been around for about a year, got to 1.2 million in ARR, and has impacted around $350 million in exploit recovery. And it's protected around $7 billion worth of assets in the DeFi industry and in Web3 as a whole.
Wow.
And from there, we've created Drosera. Drosera was an idea that was, sort of born at this confluence of Groom Lake's creation and its success, and some of the bright minds that I had worked with when we created those systems I spoke about for previous companies. And really, it's this final. I consider it the tale of two cities between Web 2 and Web 3, where and I think Andrew can appreciate this as well, that cybersecurity professionals have a plethora of very niche, very specific, and very valuable tools at their disposal, within a Web 2 context. But in Web 3, you are kind of left, you're dropped in with the wolves, right? You're given a spear and a loincloth, and there aren't many solutions to choose from. And I think products like, Lockchain and like Drosera are trying to change that.
Super helpful. And you both have really deep backgrounds, varied but deep backgrounds in the security space. I think before we dive in a little bit further, especially diving in on the Web3, it'd be good to context set a little bit. I think you're both very proactive with security initiatives that are going to end up setting new standards for how projects, institutions, and maybe even individuals think and act on security. But can we talk a little bit about what's changed the most over the past 2 or 3 years? If you want to take this from, the move to Web3, or if you want to take it from security more broadly, but new evolving exploit techniques that are really challenging how people look at threats and threatening intelligence. What's changed the most over the past 2 to 3 years? I don't know if it's politics, if it's money, it's a money grab from security companies. Andrew, do you want to talk to us a little bit about your take on that, the past 2 to 4 years?
Sure. So I think I've seen a few kind of thematic changes. So 2 or 3 years ago, from a security perspective, if you were in DeFi, like really your only security tool in your toolbox was a smart contract audit. And I used to run a firm that provided those. And that when we talk to investors and when we talk to foundations and when we talk to builders, when you said security, they heard smart contract audit. And what I've seen over the last 2 or 3 years is a real understanding that's no longer good enough. It's necessary, but not good enough. The reason it's necessary is that code is law. What's happening in the smart contract is very important to the underlying security of the system. Having an audit by a practitioner is a good idea. The problem is that it's point in time. We also we often see code deployed that isn't what was audited. It's also no longer, it's only good for as long as the code is out there, meaning that inevitably someone's going to make a change. And then finally, we see a lot of practitioners out there, while there are very good firms, We also see several firms that don't do a good job. So what I've seen in the last couple of years is the creation of new technologies, more tools in the tool bags. To FDR's point, we see more on-chain monitoring solutions. We see more code templating solutions. We see more transaction simulation type of technologies. Like this is an industry that is moving from services to solutions, which is part of the reason we're here at Lockchain. I would say more holistically, what I see is an understanding from our customers that the money's not just gone anymore. Like it used to be that if the money was taken out of your wallet, it was just gone and you didn't have a lot of options. What we see now is more and more availability to go negotiate and get some of that money back, or go prevent it from leaving where it's going. And so more and more advanced techniques there. We also see finally just more focus on attribution. So I think there's a lot going on around kind of threats and how to protect against threats, but there's also some very good work going on around who's actually executing those attacks. And if I draw the comparison to Web 2, that's kind of how things moved. When I first got into kind of cybersecurity, it was all about firewalls and IDS solutions, and then it became about advanced detection techniques, and then as of late, it's been about attribution. So I think kind of Web3 security is moving at a much faster pace than it moved in kind of traditional Web 2.
All right, and so smart contract audits are the firewalls of Web 2. FDR, can you give us your take on what you've seen as sort of the biggest changes in security over the past 2 to 4 years?
I think the biggest thing that is a bit striking is that there's been a massive difference in volume. And it's actually tracked very closely with how volatile or how strong the market has been. For example, you look at 2022, I think the number was around 3.6 billion or 3.8 billion, depending on which figure and which model you're looking at. And then in 2023 and into even 2024, we've seen a bit of a lull in that total amount. But what we have also seen...
You're talking about exploit volume, like size of attacks, right? Is that what you mean by volume?
Yeah, size of attacks, the number of attacks that have occurred, the total loss, and sort of like exfiltration that we've seen. I think it actually corresponds really tightly, which makes sense with things that are happening, like just overall from macroeconomic conditions, because that's where the money is, right? It's a lot of times crypto in the past and even to today, it's been sort of this like fatted calf where there's large value amounts and large value stores, and it's quite easy because of the nascency of the industry to come in and really make a nice killing as a black hat. And you also deal with, and Andrew touched on this, it's getting better, but you also used to have this element too where it's an industry that's meant to respect privacy and anonymity, which is a huge sort of petri dish and breeding ground for more of these black hats to kind of enter the space and take advantage of that. But really, from a capabilities perspective, it's gone back to basics. There's this huge, statistic, and this varies as well, right? They would say that 94% of the exploits that you see take place even in a Web 2 context. It's usually as a result of social engineering, right? It's not normally based on any significant amount of flaws or technical capabilities that a lone wolf or an APT has. It's just they're playing the long game. And the brutal reality of the situation right now is that no one plays the long game better than Lazarus Group. Right. I can personally attest to situations that I've worked on directly where, I and my team and people I've worked with were called in because the lead smart contract developer for a project for 18 months was actually a plant from a Lazarus Group cell. Right. So they are willing to kind of target these high value projects, high value sort of like locations, and do what is necessary as an APT to exploit that. Right. So it kind of runs the gamut. You're always going to have these smart contract vulnerabilities that present themselves, but you're also going to have, these fundamental tools of the trade. And it's just the, human failure, human error.
I think one thing that's worth pointing out is that one similarity that I see, having lived in the Web 2 space for a long time and kind of Web 3 for the last 10 years is, maybe last 5, is that most of the attacks we see are not silver bullets. It's not like there's some advanced, some super advanced attack that depends on some super unknown 0-day vulnerability. Certainly that goes on, but like most of the attacks we see are social engineering, configuration errors, code issues, bad logic checks and smart contracts, Web2 infrastructure issues, authentication problems. Like these attacks are not new. I mean, they're very common. The difference in Web3 that I see is there's just not a lot of infrastructure to deal with them. If I go look in my Web2 tool bag, as we mentioned before, like there's a lot of tech out there to help you. Here, really your best choice right now is to call up a consulting firm and get them to help you. So I'm super happy to see kind of solutions coming on the market because there's a need.
Neither one of you brought up bug bounties. Comments there? Thoughts there? Not worth it? Worth it?
You want to go first, Andrew?
I'm pro bug bounty. So if you're running a project, you should pay someone if they find a vulnerability in your project. Because the risk you run is that if you don't pay, they will take it to someone who will. So
Yep.
I'm generally a favor of bug bounties for that reason. That said, I would say that they aren't, not to use the same phrase again, but they're not a silver bullet. I mean, we run into a lot of projects that have a bug bounty program and kind of claim that as their security safety net. I would say that's not right. I mean, it's really a necessary mechanism, kind of a layered defense, but not a solution that. It's not the solution that a lot of projects believe it is.
Yeah, I'm personally extremely bearish on bug bounties, especially in the context of like Web3 and decentralization. I do agree with what Andrew just said, where it's like bug bounties are maybe this like thin layer at the top of like a 5% or 10% of a total like, layered security strategy that you might employ. But we've seen very consistently that like folks will post something on Immunify or some other platform that says like, hey, this is our payout, this is what we're doing for bug bounties, and they kind of write it off from that point and say, okay, we've done our job, we've done our due diligence, and we're covered. And quite frankly, you're living on a prayer a bit, and even living on that prayer, you're living on this idea that, again, in an industry that's built on anonymity and that's built on privacy, that someone who has a critical vulnerability that might be worth millions of dollars, you're trusting that they're going to come forward and turn that in for maybe a 50K check, maybe 100K, 150K. So some of the game theory is not really aligned there from a hacking perspective. Additionally, there is a culture of mistrust between bug bounty hunters and those who are meant to pay out the bug bounty, because too often you hear about situations where you'll come forward with a very critical vulnerability or something that's worth quite a bit of money, and the protocol can easily just say, oh, well, we actually already knew about that, but like, thanks for letting us know, right? And there's not really a lot of strong verification on either side that protects the parties. So yeah, it's just overall, it's very messy. And I think if anything, it could be like a nice addition or a cherry on top that sometimes you do get a good submission and sometimes you get some strong feedback, but definitely not the foundation. So
the way we pitch it is necessary, but often not very useful.
right.
But,
Exactly.
What's your take on what hackers are focused on right now in Web3? What are they chasing? What's their low-hanging fruit, and what are like the very experienced hackers doing? Where are they going?
Yeah, I think lowest hanging fruit, to be honest with you, is, and Andrew touched on this, is like there's a lot of ignoring what is commonplace or strong like operational security practices from like the Web2 side of the house, of just like not opening random stuff into like a PDF or something random that someone you don't know sends you, or just not falling for these like tried and true social engineering or like phishing attacks, or just having like a degree of wariness or uncertainty about like new interactions. Because to be honest with you, there is this culture in Web3 that it's like a infinite sum game, right? We talk about this really a lot in the eigenlayer ecosystem, but there are bad people in this industry and they're going to capitalize on that, right? So I think being more cognizant of social engineering, to me, could be a really strong play, and it should be focused more.
Andrew, do you have thoughts on what Web3 hackers are going after right now?
It's what you would expect. So I think they're going for, as a general statement, low-hanging fruit. We see a lot of very simple attacks against kind of fully developed applications, fully developed smart contracts, social engineering. We haven't, with the exception of kind of these longer tail APT attacks, as a general statement, the attacks that we see in Web3 look a lot like the attacks we see in Web2, just with one like very critical difference. And it's interesting because this critical difference is why a lot of Web2 firms stay out of Web3, which is in Web2 when something bad happens, you tend to be able to recover. And the example I'll give you is Equifax. They had millions and millions and millions of records stolen, kind of one of the worst breaches in U.S. history. Yet their stock price recovered in a matter of weeks. Whereas in crypto, if something bad happens, it tends to be like an end of life event. So, can you recover? Maybe. Are people getting better at recovering? Yes. But it tends to be end of life. And I think that makes it, we see projects folding every day because of some security event.
Yeah, and you can even get early stage where they've done what you think is right or what's available. They've audited the smart contract with one of the leading firms, and there's still some sort of vulnerability that some backdoor ends up happening and kills someone like right out of the gate, especially if it's early stage.
Yeah, I mean, these are end of life events, and so it just puts a lot of pressure on security firms. But I fundamentally, well, again, we see some novel attacks in the Web3 space. I mean, as a general statement, they look like the old Web2 attacks. The big difference is the end of life events, and then just the lack of tooling available to kind of help the defenders. The last thing is that all the code's public, which I would generally support. I think it's a good idea, but the downside is it's all public, and so that transparency does have some downside.
Switching gears a little bit, FDR, there's an interesting community element to Drosera with a pretty elegant design. Can you walk us through Drosera's approach or take on this a little bit at a high level? Because I think the model is very different.
Yeah, of course. So, for us, and we talk about this a lot, one of the taglines we like to attribute to Drosera is this idea of an application security economy, like a marketplace, a place where there's a lot of different moving parts, and there's this orchestra happening, right, for security and for automation. And with Drosera specifically, there was actually a bit of a technological blocker and capability blocker that stopped a strong trust model between the protocols and the projects that need security from being able to interact or have execution from operators or infrastructure providers to allow or create that security and look at those conditions and present responses, at least that in ways that were objective, right? So we were able to introduce that, I think, thanks to some of the bootstrapping capabilities with EigenLayer, because now what you see is this yin and yang relationship between protocols and operators where, incentive is there, right? Value and, offering money or yield or rewards to these operators is part of the structure. But there's also this like buoying mechanic as a deterrent to bad action by the operators, that comes by way of slashing and crypto economic security. So that in and of itself is kind of like a new paradigm. It's a new way of approaching things. And, as a final vision for Drosera, I touch on this a bit in the deck as well for our fundraise that's happening. We actually have this idea of becoming what is really the Uniswap of security for Web3. Because what's going to end up happening is that Protocol A, Protocol B, these various communities start to create these pools of value that drive the yield generation on these traps. And what can happen is that you now have multiple different value points where volatility and liquidity and transactions can take place across, and it starts to create this participatory element, right? Not only from a tech perspective with operators and protocols working together, but at an economic and speculative perspective as well.
To date, Drosera has been pretty focused on EigenLayer. Can you share, just go a little bit more as to why that's a good early place for you to start and the model there? And then also, will you go beyond that? What's the longer term vision for Drosera when it comes to sort of across all?
Yeah, of course. Yeah, I think with EigenLayer, I mean, it would be foolish to ignore kind of like the momentum and the ability that being one of those early AVSs, it's given us a lot of power and tailwind to really get what we're envisioning out to more people, to more protocols, more operators. EigenLayer's tech in general, as I talked about before, it's this huge roadmap removal piece, because all of a sudden you have a slashing mechanism and you have a payments manager mechanism that is very attractive that is forming sort of decision making that is tied to the main Ethereum trust network. It's not some like new L2 that we're ascribing this to. It's not a separate set of validators, right? This is all native Solidity. It's native Ethereum sort of cooperation. And that's something that I think EigenLayer, it's shown with their success, that EigenLayer really unlocked all of these new use cases for different AVSs and different projects to start to expand on what was possible in DeFi, right? So I think for us, though, it's not a case of being, we're very open and we view DeFi and Web3 in general as like something that is meant to be an infinite sum game. And we're extremely participatory with not only the AVSs on EigenLayer, but, many projects that aren't even necessarily part of the restaking space. So, EigenLayer it was actually Shriram, who I used to speak with. He's been a bit busy lately with mainnet and all the work that they've been doing. But, I spoke with Shriram very frequently. And I remember asking him one day, I said, Shriram, you've introduced me to these different funds. You've, brought us into the fold with what EigenLayer is doing internally. Like, how do I repay you, right? Like, how do I show you appreciation as an early stage founder for like kind of showing us this early love and this early adoption of what we're doing? And he said, I want you to go make Drosera the best cybersecurity product in Web3, and I want it to be native to EigenLayer, right? He was like, I want this to be the core security service. And, it meant a lot. It meant a lot to get that kind of buy-in from folks like himself, obviously from Mike Arrington and these different pieces. So, huge love for the EigenLayer team and still really close there.
So will that always be a part of Drosera and how it works, or will you sort of expand from there?
I think expansion is going to be necessary, right? We talked to, for example, we actually talked to a lot of solutions that, for the sake of narrative, we often have to create like comparables against. So it could be like centralized solutions like a Hypernative or a Hexagate or Cube3, et cetera. But in terms of like expanding beyond just like working with EigenLayer, we're all of a sudden talking to some of these products and saying, look, there's a potential where, we work together on, bringing some element of like a mix of centralization and decentralization to security for the projects that want that. I've heard rumors also that there are, new restaking platforms coming out soon, that might seek to kind of compete with EigenLayer on market share a bit. And, I don't think we're in this position where we want to contribute to this idea of like competition or, bad energy between different platforms. Like the way I've always described Drosera to investors and to, internally is like, we want to be the kid at the party who's just like sitting on the couch, chilling, having a drink, who's friends with everybody and just wants to help, right? We're just here to kind of like facilitate others to be at their best potential. So yeah, I don't think, it's not this idea that, for Drosera to operate, that we need EigenLayer to, work a certain way or function a certain way. So, we're very open to working with as many protocols and groups as possible.
And Andrew, switching gears, I think you're chasing a different market with different needs. I can't imagine Lockchain's clients being focused on, I guess, what's the right way to put this? Like Lockchain's clients reusing the security of Ethereum or putting their trust in there. It's more about monitoring like what's going wrong and what's going on with any of them. Can you talk a little bit about Lockchain's clients and what they're specifically looking for?
Sure. So I mean, we're in the ecosystem, but we're focused on different customer sets. So and so we're focused on hedge funds, traders, asset managers, custodians, a little bit of exchanges, regulators, and really kind of any institution that is trading or holding crypto on someone else's behalf. So we're not in retail investors today. We don't focus too heavily on kind of builders or protocols. And really, our ideal customer profile is kind of a fund or a trader that lost assets in FTX or Three Arrows Capital or the Genesis collapse, or some other DApp, creating problems for them. And so we work with very progressive, very kind of truly crypto native trading firms who have wear t-shirts to meetings and have very sophisticated trading platforms that they built themselves. And then we also work with kind of suit and tie, more traditional, very conservative institutions that are dipping their toe in with the Bitcoin ETF. So we kind of run the gamut there, but I think what you'll find across that community is it's pretty underserved. At a high level, they, in the absolute best case, they're using something like DeFi Safety, or they're getting some analyst firm to do some analysis for them once a quarter or once a month. In the more likely case, they're building a spreadsheet that they fill out themselves, with a risk committee every now and then. And in the most likely case, they're doing nothing. Like back to the spear and loincloth comments, like they're really out there taking a huge amount of risk. Every customer we talk to talks about this like freak out when they hit trade, and then it takes 2, 3, 4 minutes for it to show up on chain. Like all of them talk about that problem and just nervousness that they have. Most of our customers have assets spread across dozens to hundreds of wallets, and are dealing with the issues related to that. So what Lockchain does kind of very simply is try and take some of the complexity out of this. We offer today kind of 2 very simple features that are very valuable to them. One is we do an always-on due diligence. So we take in data from on and off-chain sources, from a lot of on-chain and off-chain sources, dozens. We bring that into the platform. We use AI to analyze it, and we provide them some risk scoring about what they're trading or what they're trading on, or who their counterparty is. What we find is that without this, they have no idea who they're even working with, or kind of what the underlying security is of something fairly complicated like Coinbase. And then we answer like 180-ish kind of questions, and we answer those questions as often as we can, and we notify them when something changes. And then secondly, what we offer is a risk notification engine. So we let them know in real time that something bad is happening. And we have a lot of customers that use that to defend their positions. We have other customers that use it offensively to try and make money off the data that we have. But we provide them that there's information that there's a point in time issue going on that impacts their holdings. And the system also understands contagion. So we can tell them, hey, it's not just bad. It's maybe not directly applicable to what's in your holdings, but it is related to something you hold that could have impact on you. So we use all that data. We give them a nice, comfy, warm blanket around their counterparties and who they're trading with. We're adding all types of compliance features, primarily focused on asset managers with these Bitcoin ETFs. Again, they're kind of used to having a tool bag of capability they just don't have. We also find that asset managers don't really trust their custodians, which, when we say that to the custodians, they have a little bit of a freak out, but they just fundamentally don't. So kind of building those compliance monitoring tools. And then we're moving into kind of more predictive analytics, which is what all of them want. And the general feedback we get from these customers when we meet with them is, we had no idea this was possible. And I think that's the best feedback you can get as a startup.
Andrew, why do you think that Web2 security companies haven't moved towards needed Web3 models? And do you think that they eventually get there? Or do you think they just continue serving Web2 and decentralized stuff is off the table for them because it's too complex or whatever the reasons might be?
When we were, it's a good question. When we were forming the company, I went and met with either board members or CEOs that I knew from traditional Web2 security firms, and basically asked them the question, like, why are you not playing in this space? Like, there is a load of money to be made because they're underserved. Why have you not moved your capabilities this direction? And I somewhat universally got the same answer, which was either A, we don't understand it, and we don't think our skills transfer, or B, we see it as too much risk. Because the kind of the nature at the time is that the risk wasn't well understood. So will they come this direction? Probably inevitably. I've started to see some consulting firms move this direction, kind of move into the application security, smart contract audit space. I think on the product side, I don't see a lot of movement. I think it's new companies predominantly.
You brought up an interesting point around costs. FDR, I'm going to pass this one to you first. With the Drosera model, and then we're going to talk about the Lockchain model. Can we talk about costs associated? And obviously there's, huge, like, it's worth it because it's going to be saving whatever exploit or, end of life events that might happen. But can you talk about Drosera's cost model or savings or increases, and then we'll turn the same thing for Lockchain.
Yeah, 100%. There's kind of like a twofold component to this. So the first is that when you're trying to do it's kind of like a build versus buy consideration in a way. So if you're trying to take the build consideration as a protocol for security infrastructure, you fall into that situation that I talked about was like an origin story for Drosera, where you have to hire a team of developers. You have to create some internal ingestion points or methods for ingestion. You have to structure the infrastructure yourself and maintain and refine that infrastructure ad infinitum, which is not cheap, right? You're basically paying, you have personnel burn that is very typical of, strong tech employees or contractors, and you're maintaining that consistently, and it cuts out a massive market, and it's a huge, huge spend and huge burn, even for the projects that can kind of like bear that brunt. So as we saw with a lot of successful models in Web 2, if there's a way that we can delegate or outsource that spend, right, and create these like still trusted models to achieve the objective or the effect, which is incident response and security, then we should pursue that. So when we looked at the data, right, so once we arrived at that point, we said, well, what's the data on maybe a similar structured project or protocol or something that exists in the space? And actually the data we looked at was for Immunify. And for Immunify, the way that their data was broken down, and again, they're a bug bounty platform, so it's totally different vertical. They're not a competitor, but the way that everything was broken down was, I believe it was 321 protocols that were in this data set, and the unit of measurement for like what the median value was that a project was expected to pay was this idea of like an asset, right? So like the median reward per asset was around $65,000. That's not an average, that's a median, right? So that $65,000 mark was showing that for 321 protocols, regardless of size, that there was a willingness to have security budget spend in the tens of thousands of dollars, right? On a per year bug bounty program or on critical reward, like a critical vulnerability reward. So for us, it just came down to, we need to create two different models for Drosera as it evolves. I think the first model, where we refine the tech and we get a good idea for like how we can improve Drosera, is like a simple gas tank model, where we can say we have massive market validation and data points that show on a non-dynamic solution that doesn't leverage any kind of software set or like something that you would expect from an automation capability in Web 2 security. We're able to say, if you stake or place 30K for a year's budget into a trap, we can guarantee block by block time series analysis response on whatever condition you. That's half of the per asset price that you're paying for, again, a more primitive solution in bug bounties. And I hate to be that guy, because again, I think it's necessary, but it's, like Andrew said, it doesn't make or break your security infrastructure. So that was the first thing. And on the second version of Drosera's model, again, that's where we get into this potential where your protocol might not actually have to spend a single penny on your security infrastructure. Because if you can stake to the trap and you can get your community to create some magnitudinal or exponential effect by also staking small amounts, you could generate yield that rewards these operators. And that yield in and of itself is the incentive for their participation. So your only loss or cost is opportunity cost from staking.
And then Andrew, I know you've integrated a lot of AI to your offerings as well. What does that look like from a sort of Web 2 model to Web 3 model cost perspective changes?
I mean, when we started the company, we thought there was an opportunity to get like basis point style fees. And I would say what we found is that most traders are not interested in that. And they would rather pay a flat fee and instead as a subscription. And instead, if at all possible, put that into the fund, into the fund fees versus the management fee. And kind of once you're in the fund fee, it's kind of viewed as a compliance or kind of necessary tool to protect the investment. So we do it as a subscription. We price as a kind of a why not price, a couple $1,000 a month for kind of your small trading firms, and then it just grows from there. we have some customers just asking for huge amounts of data and huge amounts of capability, and it can go up from there. But the nice thing about our platform is using AI. I mean, the last company, 100 analysts. This company, we're doing it with a team of 9. And the team that we have is focused on tuning the AI, not on integrating data sources or integrating customers or kind of those manual tasks. So it's subscription based. And to answer the question of like, what should you be spending on security? What I see is most of the kind of where we live, there's zero budget. So that's why they want to put it in the fund fee, because they don't even think about security, but are starting to recognize they need it. And then on the builder protocol side, after working with lots of those companies and lots of those founders, none of them are spending enough is kind of my general sense. And unfortunately, like a little bit, you get what you pay for. I know no one wants to hear that, but and it was true in Web 2, and it's certainly true in Web 3.
Thank you both. I want to close out here, but before we do, predictions. What's the next big, huge hack? And then what does security look like over the next 2 years?
FDR, right?
Oof. I don't even know if I want to answer this. So if I am a betting man, I think that anytime you have something that takes the industry by storm and has massive momentum and massive hype and massive input and value, and that value sits a bit and doesn't have a place to go immediately, you start to invite wolves to come sniff around. And I think that the biggest risk we are going to see to our ecosystem, and Drosera does not fall into this, and many AVSs don't, but it's AVSs that are trying to capitalize on momentum around EigenLayer and the good work that EigenLayer is trying to do, but who introduce extremely speculative capabilities or speculative slashing, or they rush to get a product out just to ride the coattails of what EigenLayer and Srirum's team, what they've been able to do. And I think that there will be some shockwaves from that. And I want to say here and now on the record, in April of 2024, that should not be an indicator of the staying power or the strength of restaking and EigenLayer as a product. So,
thanks, FDR. Andrew, any comments on that?
I've been doing this for a long time across a couple different communities, and often asked by customers like what's their biggest risk? Is it some new technology they're deploying? Is it some threat actor? Is it some infrastructure they're dependent on? Is it third-party software? What is it? And I've answered the question the same for many years, and I think it's particularly true in this ecosystem, which is it's speed. Speed is your biggest risk. Mm-hmm. So everyone is trying to get to market as fast as they can. To FDR's point, they want to go ride the coattails of some shooting star. We see more projects shipping code faster than ever before. And unfortunately, speed is the enemy of security. I mean, no matter how you do it. So I would say, speed is what I worry about. I would say the other thing that just kind of keeps me up at night is that we're just seeing a huge consolidation of funds across a couple of projects and custodians. I mean, if you look at the total amount of money out there and kind of where all of it sits, there is a lot of money sitting with a few custodians. I would say, those are the highest castle walls, but it's also where the wolves want to go attack.
Excellent. FDR, Andrew, thank you so much for joining us. For listeners, I'll put in the show notes links to Drosera.io and Lockchain.ai, so you can go learn more about each of these projects. But in the meantime, thank you both for joining us on the Pirate Pod. Really appreciate it.
Thank you.
Thank you, Kelly.